Good afternoon, everyone. This is Hunter Mozingo bringing you your daily market insight video for Thursday, August 19th. It's a little over 20 minutes after market close here in Jacksonville, Florida. And today we have some more downgrades for you pertaining to our market state as well as the trend gauge. We're going to get into that here in a moment. And additionally, we're going to cover some sectors that have absolutely gotten crushed, looked like they were coming to life a little bit over the last few weeks. But within the last 5-6 days, some of these sectors and the stocks within them absolutely getting hammered. We're going to look at some of those and one that perhaps could be near a bottom, at least in the near term. Additionally, we're going to go over some of the leaders today, a handful of the trades that we made today, and we'll get to that shortly. But first, let's go over what just happened. And you can see the NASDAQ and the S&P 500 bounce off of the 50-day. They pretty much touched it overnight in the futures. Opened up down, ended up finishing green. As you can see, the S&P up 0.1%, 0.13 to be exact. Q's up 0.5%. Dow's down about 0.2%. Mid caps down 0.8. Russell 2000, the laggard, down 1.22%. A lot of that due to some of those sectors that have been getting crushed, like I mentioned a moment ago. The change to market state is that it is now in consolidation as opposed to uptrend. We had some of the indices slice through key moving averages today and not actually get completely back above them. We're going to look at those charts here in a moment. And the trend gauge change was short term moving to neutral. So Don changed growth leaders, market leaders from up to neutral on Tuesday. Today we changed short term from bullish to neutral or up to neutral. And that is because, like we said, the S&P, the NASDAQ slicing through some key moving averages, the Russell, the Dow, etc., pretty much across the board. So medium term, still intact for the most part, but you see that little yellow arrow pointing towards neutral as well. Long term, we are above the 200-day moving average on most of the indices. One of them we are not. We're going to look at that here in just a second. And before I do that, let me cover the team here at Revere. This is the whole group. If you have any questions for anything that I cover in the video or anything I say, please email me, hunter@revereasset.com. If you're interested in our strategy or investment approach, what we do, you can email me, Hunter, or you can email any of these people, Dan, Tim, Merrill, Alex, or Don@revereasset.com as well. So let's get to the charts here. S&P 500, like I mentioned, slicing through a key moving average, and that would be the 21 EMA, closed slightly below it yesterday. Gap down this morning, you can see finished at the top of the range, but right there into the moving average. That 440 level seems to be of importance. So I would watch that area. If it can get back above it, that's great. If not, I would be watching the lows of today on all the indices, as well as a lot of these stocks that we're going to cover. And also, I should note on the S&P, let me pull up the SPX, which should be good here. So this morning, when we were kind of towards the lows of the day, you can see this is SPX on a 30-minute chart, and I am zoomed in here, so I don't know if you're going to be able to see the full magnitude of the, let's see if a 60-minute makes it a little bit easier. Okay, so basically, we filled the gap all the way to the 722 gap up here on the SPX, or just your standard S&P 500 composite. You can see the bounce pretty clearly across there at 43.70 more or less, 43.65, whatever you want to call it. The actual low for the S&P was 43.68 and finished in the middle of the range, as you can see there. And I'll take this off of a 60 minutes so it's a little bit easier. But something we wanted to show you there on the S&P, the Qs, the relative strength leader for today, up the most out of the indices. Same thing, pretty much touched the 50 in after hours / pre-market trading. Ran up into the 21 and the 8 and was not quite able to close above it. It did get above it, but not able to close above it. That's something you want to watch on the Qs, this 365 level, 366. Can it clear that, or is it rejected there? Same scenario. Watch the lows of today for the Qs, which is pretty much 360 or 359.96. The Dow also slicing through the 21, but bouncing off of the 50-day. And the mid caps and small caps, the laggards, as you can see here, Mid caps below the 50 and the 21, 200-day moving average about 4% below there. IWM breaking the 200-day. This is the one index that I mentioned was below it. You can see here, stayed above it yesterday, tried to get above it today, ran right into it and just could not do it. Another area you want to watch. Can IWM get back above 214 and close there, or is IWM going to break the lows of today, which is 210.68? So like I said, the highs and lows of today on these indices, as well as a lot of stocks, very important. You just want to set alerts so you kind of know which way things are moving. Before we go to individual stocks, first, let's take a look at TLT. Although the correlation has not really held up as well as it did for the last couple of months here in the last few weeks, nonetheless, TLT has resumed upward, bounced off of these moving averages after getting through them and started moving higher. So once again, when TLT is moving higher, that means rates or yields are coming down, right? So that's going to be your TNX. And you can see TNX ran up really hard right here, which is when a lot of banks started to rally, got rejected, and have come back down almost to their lows here, not too far off of that area. But anyways, decent rejection for yields and continuation in an uptrend for TLT. So let's cover a few leaders today. So Nvidia actually reported earnings yesterday after the close. They were actually down a little bit this morning here, not too much, but you can see down to 187 after closing at 190 pretty much yesterday. And after that happened, they ripped. So Nvidia went up to 205, came all the way back to 195 over the course of the day and bounced there, which is where the 50-day is as well. So Nvidia with a very, very wide range, but nonetheless very strong. There's volume. And so able to stay above the 8, the 21, and the 50. So some good action from Nvidia on a otherwise pretty poor day for most stocks. Chipotle also showing some strength today, especially considering that it's extended. It had a big gap up, reclaiming the 8-day moving average, albeit on light volume. And Regeneron, one that Alex has been talking about, this one having a really nice day, has been in a really strong uptrend here, as you can see. Over the last several months for REGN, which corresponds to a strong move in healthcare as a whole. Net staying above the 21, one of the stronger growth stocks today. Didn't finish the strongest, but staying above the 21 EMA is what's important here on net. And lastly, we trimmed this one a little bit into the close, but Datadog holding up above the 8. It was green for the most part of the day, finished pretty poorly, which is why we trimmed a little bit of this. But a leading stock that had a gap up that's staying above the 8-day. And I should note Net, Datadog, and Nvidia all in the Grotection portfolio. We did also buy IGV today, the software ETF, and you can see the reclaim of the 21 here. And the stocks that make up this ETF, or at least are the biggest constituents of it, are your Adobes, your Microsofts, right? And they look a lot better than most of the stocks in the market, which brings me to my next point is big tech really was a safe haven again today. It was where money was flowing into. You can see Microsoft having a great day, Adobe, Netflix also having a strong day with volume here on Netflix, moving up and out of those converging moving averages. Apple was also up today. So big tech showing some strength, certainly carrying the market a little bit. Obviously, Nvidia helping the NASDAQ out today. We did sell both AMD and Square today. AMD just not really able to stay above the 21. It closed slightly below it, rejected at the 8-day. It actually has a very similar look to Square when Square was rejected at the 8-day here and then continued lower today. We sold both of those positions today, AMD and Square, as they were breaking the 21 and not really able to get any continued momentum back above. We also owned some SQQQ coming into today, which was a hedge position. We sold that for a small profit today when the NASDAQ was down this morning. And now I want to highlight some of these sectors that are absolutely getting destroyed over the last few days, and that is going to be your value sectors. And we're going to start here with XME. And it's not the most horrible thing in the world here, but you see this strong rally in metals and mining here. up over these moving averages. You see the cup and handle formation volume on a lot of these up days, but nonetheless, XME is down roughly 12% or so over the last 5 or 6 trading days. And when you actually look at the positions within here, names like Alcoa are down 11% today. This is a steel company. STLD and Nucor both having pretty rough days today, down 3%, although they did bounce off and reclaim their moving averages. Nucor down 2.7. CLF, this is another steel name, down 7% today. FCX, this is a copper name, down 4.3%. BALE, this is another metals and mining type of name. You can see it's down 7% today. Rio, same thing, down 3% today. So these metals and minings, more commodity oriented stocks have absolutely gotten destroyed. I mean, this is a very severe move for this stock. And I mean, you can say the same thing about a lot of these charts here. FCX looks the same way. I mean, FCX broke out back above these moving averages, was looking relatively good, didn't have massive volume, but really gave these back, gave all of this back. This move from 32 came back and touched that low pretty much today. So those names really not holding up well. Additionally, you've got the banks not acting very good either. As yields have continued lower, so have they. KRE down, just to show you a few names here. WAL breaking the 50-day. SIVB breaking its moving averages as well, as you can see there. So the banks aren't looking great. And then you've also got oil looking horrible. Oil taking out the previous lows it put in of 77. But this is the one that I think you want to keep a close eye on here. It has not had any kind of relief really since it started pulling back, and this was the last value sector standing really. Metals and mining, steel, a lot of those other areas started to pull back a little bit before oil. Oil actually went on a decent rally here, while a lot of other commodity / inflation plays were starting to pull back or top. But XOP basically undercut this low by, it looks like, about 7-8% or so. XME did something similar before it bounced. Additionally, you've also got this 72 area here as a support. You've got 72 here as previous resistance, and then you can't see it, but farther on the left side of the chart, there's another area where 72 was resistance. So I would just watch to see if this holds, and I would look for a strong gap up to get back above 77 and back above the 200-day moving average here on XOP. And one last sector that was really showing strength last week and has given it all back, MOS, which is going to be your chemical agriculture, very similar to FCX, just brutal pullback on roughly 17% over the course of 5-6 days. NTR, a big gap up on earnings, and has given all of that back as well. So it's not just one sector or one area. There's pretty broad weakness, with the exception of some tech and growth leaders. We did see growth act better overall today as far as the NASDAQ, but we are seeing some broadening weakness. So less of what we saw earlier this year, which was very concentrated weakness in one area and concentrated strength in another, and more broad weakness at the current time. So last thing before I move on, and I covered pretty much all of these already, I think, but last one, Caterpillar also breaking the 200-day, giving back all of this move, which had some volume, the same thing, just back above the 50, an absolute trap. I mean, from 220 to 200 in 5 days, pretty much straight down. So I know I mentioned like CAT, MOS, and FCX as being at potentially good risk reward areas, but all of those pretty much failed. I mean, when CAT started breaking this 50-21 area, that was an alert to sell. When it broke the 200 today, that's certainly an alert to sell. FCX, same scenario. When it started breaking the 50 and the 21, that's something you want to take note of and just get out of it, or at least trim it. And then MOS is going to be a very similar story, just a harsh break of the 21 and the 50 here, and then rejected at the 21 the next day, down to the 200 the next day. So those stocks, those sectors really not holding up well. And really it was big tech kind of carrying the market a little bit today. So we'll see how the rest of the week plays out. I hope you guys enjoyed the analysis and the content. As always, if you have any questions, send me an email. I'd be happy to communicate with any of you. So enjoy the rest of your week. Have a great weekend. I'll see you on the podcast here in just a few days. Thanks, everybody.